This week in the world of markets felt like a carefully woven thriller. Quiet on the surface, but filled with undercurrents, unexpected turns, and a cast of characters playing their parts on a global stage. Let's begin at home. The Indian markets started the week with a cautious optimism, as if investors were trying to read the mind of an author who had just started a new chapter. With the general elections looming just around the corner, the street wasn't just looking at earnings and economic indicators, it was looking at the mood of the nation. Nifty and Sensex hovered near their all-time highs, almost like seasoned actors waiting for the director's cue. But it wasn't blind exuberance. Investors were selective, leaning into sectors like banking, FMCG, and autos, while showing hesitation around IT and pharma, where earnings had been mixed. And speaking of earnings, this week was packed. Companies came forward with their quarterly results like contestants in a reality show, each revealing surprises, disappointments, and a glimpse into what's ahead. Reliance sparked interest with a steady performance, while Infosys, despite the anticipation, left the market wanting more. The big surprise came from the midcaps, some of which outperformed and caught investors off guard, driving fresh momentum into that segment. Meanwhile, the RBI was a silent observer this week, holding back on any immediate moves, but continuing to keep an eye on inflation and liquidity. But the bond market whispered another story. Yields edged slightly lower, hinting at expectations that interest rates may remain stable, at least until the election results come in and paint a clearer picture of fiscal direction. Now, shift the lens to the global stage. The U.S. markets started the week with anxiety and ended with cautious hope. All eyes were on the Federal Reserve, not because they were expected to make a move, but because everyone wanted to read between the lines. The Fed minutes echoed one thing loud and clear. Inflation is still sticky, and the path to rate cuts won't be as fast or as easy as investors had hoped earlier this year. Wall Street responded with a mix of sighs and shrugs. Tech stocks saw some pressure, while value stocks and industrials gained favor. Europe, on the other hand, had its own script. The ECB hinted at a possible rate cut in June, igniting some optimism in the markets there. The euro weakened a bit, and European indices breathed easier, led by gains in the energy and consumer sectors. And then came the wild card, geopolitics. Tensions in the Middle East resurfaced with reports of missile strikes and escalations between Iran and Israel. Oil prices, like an audience on edge, spiked midweek, touching new monthly highs before calming down slightly. Gold, the eternal safe haven, also rallied, telling us that fear hadn't entirely left the room. Back in Asia, China showed some encouraging signs. Economic data, particularly around exports and industrial activity, suggested that the dragon is stirring from its slumber. This gave a small boost to global sentiment, and markets across the region, including Japan and South Korea, ended the week on a positive note. In summary, this week was less about fireworks and more about positioning. The global and Indian markets were like chessboards, each move calculated, every reaction measured. Investors aren't rushing in or out. They're waiting, watching, and adjusting their bets as new pieces fall into place. As we head into the next week, the story remains open-ended. But one thing is clear. Every chapter in this market saga is setting up for something big. And whether you're a seasoned trader or just watching from the sidelines, the drama is far from over.